So you mentioned the other book that you had written, and I want to switch gears and talk about that. You wrote a book about Jim Simons, who's one of the best-known quants out there. And I want to come back to something that Anthony was talking about earlier in the show, which is your theory that the imposition of the Volcker Rule fundamentally changed the liquidity picture in the market, opened the door for perhaps quants to take up a bigger portion. Or
no, I think it hurt the quant. It hurt the quants. Like Jim Simons is the best of the quants, but most of the quant hedge fund strategies have been hurt by the monetary policy and have been actually hurt by the Volcker Rule. It's the algorithmic traders, it's places like Virtu and the original Knight Security that have really benefited from the evaporation of prop capital.
Well, and right now we're down at the lows of the market. We're down about 350 points on the Dow now. What do you think of that idea, that theory that there's not that prop trading support, perhaps in a market like this, that there's not that other side of the trade coming in and on an up day or on a down day, right, to take the other side?
Yeah, historically, we used to have prop traders, we used to have people on the street, but somehow they weren't around during tumbles in the market. They couldn't pick up their phones, they weren't available. So we like to blame machines today. It's easy to have a boogeyman. I'm not sure things have changed that dramatically. Yes, some of the machines do pull back on days like this. I know Simons and Renaissance often have a system where they won't get involved when things go crazy. So it would be helpful to have somebody like them stepping in the last couple of days when we're down 1,500 points. But the other reasons why, there are fundamental reasons why we've been falling.
But when you talk about data, it can be, I had a discussion with somebody similar to you, it can be an elixir that misleads you, because data, it gives you a false sense of confidence. When you get a little bit of data, you can make a better decision. But the more data you get, what they have found is your confidence goes up, and yet you may be asking the wrong question of that data.
If you're an individual, but if you look at the best companies today, they're all based on models, dynamic models. Tencent, Netflix, Amazon, they build their firms around models. And to me, need decisions that are based on rules, if not systems. You look at pilots, you look at surgeons, whereas in the White House or the Federal Reserve, they're kind of winging it. So to me, you got to do more decision based on data. Maybe don't turn everything over to data, but informed by data, as opposed to just sort of using intuition like old school decisions have been made in our economy.
I want to give Anthony one quick second.
No, the only thing I would say, and I would be interested in the data, if you look at the 50-day moving average, the 100 and 200 moving day average, and you look at volume, the prop traders are out of that market. The algo traders are in the market. And if you look at drops in volatility, you have much steeper declines. And in August of 2015, you had a taper or a tape tantrum, if you will, whatever they want to call it. And you saw the unbundling of the technology ETF, where Facebook traded down 26 points in 2 hours. So 3 things I'm worried about, just to add more to the worries. No prop trading, the ETFs, you've got illiquid securities like in the high yield ETF that are trading daily, and there's a lot more risk in the market than the mom and pops think.
Greg Zuckerman. Thank you.
I would agree. I've got some concerns about ETFs, but I'm not as concerned about the lack of prop traders. Things have been pretty placid over the past decade or so as the quants
of monetary policy.
have, also as the quants have kind of embraced trading and kind of dominated. So there are a lot of reasons, but monetary policy is a key reason as well.
Come back. Greg Zuckerman, writer for the Wall Street Journal and author of The Man Who Solved the Market, How Jim Simons Launched the Quant Revolution. Thanks for being here
Sure
again.
thing.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.